All right. Hello, everybody. Hello, everybody. Happy pre-Thanksgiving, I guess this is. Thanksgiving Day Eve. I think that's what we call it. Hope you're all doing well. As expected, after all of the big economic news this morning, we have seen the market just kind of settle into a very, very slow, tight range. Volumes are down quite a bit right now. Can everybody see and hear me okay? Are we coming through loud and clear? I am hoping. Boy, oh boy. There we go. Phew. Sandip, how are you? Can everybody hear and see me okay? Good. Thank goodness. All right. Boy, we had some fireworks this morning, guys. Especially in an op vol position. We had a stock that, by my calculation, and I think many of the other people in the room, 371%. 371% was the return. Did we get a little lucky? Yeah, we probably got a little lucky. We had a really, really great position on in a stock called SYM. We had a diagonal put spread. Okay, in the diagonal put spread, on the short put, it expired. Let me actually go over to the screen here. Okay, here's the stock we're talking about. The short put we had, which was the 30 strike put. Okay, that expired worthless last week. That left us with, hang on, am I on SYM? Yes. That left us with a naked long put. This one right here, the 32 strike put, expiring today, not today, expiring Friday. The stock opened down right around 25 or so this morning. So all of a sudden, those puts, which were trading, a nickel or so yesterday, those puts this morning opened up at $7, thereabouts. Some people got out a little bit higher. I think they may have traded up to 9. Okay, up to 9 at its best value. But that was a whopper. How many of you here were in that position? How many of you were in that position? Awesome. So we did today, we went through a bunch of iterations on how to manage this position. Okay, because a lot of times, guys, when we see a big stock move, and typically this will happen on earnings, but when we see a big stock move, okay, that'll happen post-market or pre-market. So if earnings come out after the market, you can see the big market move. Only the stock is trading. Typically, it's a thinner market. If the news comes out in the morning, we see that happen in the morning, pre the market opening. And if we have an option position, we could just kind of be at the whim of the markets. And even though we see something trading, perhaps beforehand, how do we lock that in? How do we lock that in? Well, today we were able to do that by actually trading stock and 100% be able to lock that in without any risk. Okay, now, if you waited until the market opened, that was fine. You know, and it turned out that the market really didn't move much from the pre-market to when the actual market opened, when we could trade options. So you were fine. But so many times we do see that can move. And, you know, gains that we could have had pre-market, all of a sudden, maybe those options that we have or the position that we have are not worth as much when the market opens. So today, we were able to completely lock that in if you wanted to, by trading stock beforehand. So that was obviously great way to kick off the holiday, I guess. You can say that was a great way to get us into Black Friday. All right, everybody, let's take a look now at today's. Where am I? Here we go. Trying. There we go. Okay, everyone. Today we've got the challenge. Okay, who is up for the challenge? Stephen, why did you close last Friday? Ouch. Ouch, ouch, ouch. I'm sorry about that. Sorry about that. Today we have our challenge. Want to do something fun today? Certainly I'll take any questions, okay, that you want. I will take any questions that you want. Here's what we're going to do besides the wheel today. I am going to go through 4 different scenarios, 4 different option positions. And I am going to ask all of you, you're all getting this at the same time, okay? I'm going to ask all of you a question. The first correct answer, and we will do our best to monitor the chat. The first correct answer that we see, you will win some swag. Are you guys ready? Are you guys ready to take the Prosper Challenge? Sandip, that is correct. Now, I'm not sure, Sandip, I think that your 90, yeah, that is correct, the 95 cents. So you made, you know, just over $6 a contract. That is 100% correct. Okay, everybody ready for the challenge? Oh, come on, Zora, you got to speed that thing up in the van. You got to speed that up. All right, here we go, guys. Again, we are going to do our best looking for the first correct answer. Here we go. These are the 4 topics, the 4 questions that we are going to ask today. We're going to do something on extrinsic value. We're going to do something on reward to risk. We're going to do something on synthetic options. If you don't know what synthetic options are, sorry, we had a long conversation this morning. Okay? And we're going to do something on break evens. All right. Number 1, guys, extrinsic value. Here is the scenario. Here is the scenario. Okay? We're talking about VRT stock, and you don't have to look at your charts or anything. I'm giving you everything that you need to know. You know, maybe you want to write this down on a notepad to figure it out or whatever. That's fine. But I am giving you everything you need to know. Okay, number 1, VRT stock trading 126. 126. your position long 1 December 120 call. You are also short 2 December 130 calls. And you're long 1 December 133 call. That is a broken wing call butterfly. Okay? If this thing is trading for $3.95, okay? If it's trading for $3.95, how much extrinsic value is in this position? Okay? First correct answer up on the board is what I am looking for. So I am going to keep a close eye in the chat here, guys, and I'll talk to you guys as we're going along here. This is a broken wing call butterfly. Okay, I'm going to let all of these answers come on in here. Keep them coming here, guys, and then we'll work through them. Okay, we've got 205, 405, 269, 125-ish. Zora, there's no ish. There's no ish. 405. Keep them coming here, guys. Keep them coming here, guys. Branton, I see you're in the room. Right, Branton, you're watching this in the room right now? Okay. Are you also in the live stream, Branton? Got to get you in there to be part of the contest. You got to get in there. I can't answer you here, Alex, Branton, those of you in the room, I can't answer you. I'm only on the live stream. Okay, going to give another minute here, guys. Lots of answers, lots of different answers, which is great. Okay, come on. We need more. There's so many of you in here right now. And what do we have? Only 25 answers or so right now? Even if you don't know, come on, put out a guess. Doesn't hurt you. Come on. And while you're at it, guys, while you're at it, please smash that like, share it. Okay? Do all of those good things. All right. This answer is finished. This question is finished. There are a bunch of correct ones now, but the first correct one was Bill. Okay, Bill 8575. Bill 8575. The answer is $2.05. How do we get to 205? How do we get to 205? Again, think of extrinsic value, folks, intrinsic and extrinsic, as if this was expiration, what would this position be worth? Okay, if this was expiration, what would this position be worth? Well, we know there's only one option that's going to be worth anything here at expiration. This one's not going to be worth anything. This one's not going to be worth anything. What is this going to be worth? Well, that's going to be $6 in the money, right? The intrinsic value at expiration would be 6. So if the spread is currently trading for $3.95, that means the answer $2.05. Does everybody see that? Does everybody see that? Scott S., the link is, if you just scroll through the chat there, you'll see it in purple. We need you in there every single day. All right, Bill. Bill. You are correct. Okay, before we move on to the next question, let me put up our word of the day here, folks. That's not the word of the day. Here is the word of the day. No, it's not turkey. It's not anything with Thanksgiving. I know, bah humbug. Challenge. Get that in the chat, everybody. Get that in the chat. Challenge is on the wheel. All right. Give that another 20 seconds or so, and then we'll go on to question number 2. Okay, let's move on to question number 2. We've got one winner, and we're gonna keep this so it's an even playing field for everyone. Bill, you can still answer. Okay, you were the right answer. First one, you were the right answer. But we're going to get a second winner in for this next one, even if you're the first one. All right, number 2, reward to risk. Reward to risk here, guys. Adobe stock, trading $5.15. Okay? You are long. You own one of the 505 puts. You have sold 2 of the 495 puts. You have bought a 460 put. This is known as a short broken wing put butterfly, or a credit broken wing put butterfly. Okay? Does everybody have that? Okay. Can everybody see this on the screen now? Groucho is gone. We've got the new reward to risk question on the screen here. Okay, excellent. Trade price. You're able to collect $6. I probably should have said, my bad, this is a $6 credit. $6 credit. Okay? On a worst case basis, what is your reward to risk? On a worst case basis, what is your reward to risk? Okay, let me know. Let me know again. We tried to do a position like this in Amgen, okay, last week, and I think it was earlier this week in MSTR, same sort of thing. This is a bullish position, but what is the reward to risk at a worst case scenario? Okay, while you guys are noodling on that, trying to figure that one out here, let's get Groucho back up here for anybody that didn't get it before. Okay, let us know what you got there, folks. Okay, lots of answers coming through. I love it. I love it. And I'm going to work through it with you guys. Give it another minute or so here for the answers. Tommy, you know what? That might be the best answer I think I've seen. Honesty is the best policy. I don't have a clue. That is actually a really good answer. I appreciate that, Tommy. I appreciate that. Okay, let's go through this here. So, my question to everybody is, what would be a worst case basis? Where would the stock need to be a worst case basis? What do you guys think? Okay, perfect. You got it. Okay, good. Bear, who is that? Yuvin, sorry. Hopefully I pronounced your name right. 460 or less would be worst case. Gilbert, that's right. Wayne, Branton, ZW, Robert. Above 505 would be awesome. Because if we were above 505 and all of the options were worthless, we would keep the $6. So the stock going up here would be a wonderful thing for us, not a bad thing. A bad thing would be if we were 460 or lower. So we can calculate this at a worst case basis with the stock being 460 or 0 or 100 or 200 or anywhere in the middle there. It doesn't matter. It's all going to be the same. So let's do it with the stock 460. Okay? At 460, our long put, and again, remember I always tell you guys, I always try to explain to everybody, do this the longhand way. Do it the old-fashioned way. Take out pen and paper. Don't just plug it into your trading platform. Do it the old-fashioned way so you can actually learn it. Okay. 45. Right? 505 put could be worth $45 with the stock at 460. The 495 puts would be 35 each. Remember, there's two of those. And that's going to be a negative 35 because we're short those. And then the 460 put would be worthless. So at a worst case basis here, at a worst case basis, this thing could be worth negative $25. Does everybody see that? 45 on the plus side, negative 70 on the minus side. Okay, let's do the same math if the stock was 0, just so we can kind of play it out here and you can see. Okay, if the stock was 0, these are going to be worth 505. Okay, these are going to be worth 495 each, or minus 990. And that's going to be worth 460. What do we come up with right here? The exact same answer. Minus 25. Does everybody see that? Okay, good. So, at a worst case, that was the question here. At a worst case, what is our reward? Our reward, in a best case, if everything is worthless, but at worst case, is $6, right? We collected $6. But if we could lose 25, the reward to risk, 6 divided by 25. Definitely not something I would ever want to do here, guys, is 0.24 to 1. 0.24 to 1. Does everybody see that? Now I've got to go back through the chat here, and I've got to see the first 0.24 to 1. Now, I'm not sure there's one up there. I'm going through. I see a 0.67 was about the closest. 0.6, 2 to 3. Oh, I do see one. I think I do see one. Bear, is that you? Herbert's got it right now, and Hinat's got it right now, but it looks to me like Bear had it. Very, very nicely done. Does everybody see how we got 0.24 to 1? Meaning at a worst case scenario here, a worst case. For every dollar we're risking, we can only make 0.24. We didn't pay $6, Yuvin. The $6 was a credit. I put that up here before. The $6 was a credit. That's why I had to put that in there, Brandon, as worst case. Okay. Let's move on to number 3, guys. Hopefully you guys were all paying attention this morning. Synthetic options. Synthetic options. Synthetic options are when you have a call position, but it acts like a put, or a put position and it acts like a call. And remember, with synthetic options, the amount of premium, the amount of extrinsic value should be approximately the same in both a call and a put at the same strike. So here is our question on synthetic options. If Reddit stock is trading 137 and the December 6th 135 strike call is trading $6.60. Okay? What approximately should be the price of the December 6th 135 put? Francisco, to your comment about there's a chance for higher reward, that is exactly why I said at a worst case scenario. Okay, that's why I said at a worst case scenario. Okay, lots of quick answers coming in here. Lots of quick answers coming in. While there's a few more coming in here, guys, I know we got a big list before. I want to make sure that I've got everybody on here. So I am looking Okay, I got a couple more. Make sure you get the challenge in there, guys. Make sure you get the challenge in there. Got a full list today. Okay. Cheyenne, okay, you're in under the gun there. Just made it. Cheyenne, got it. Yeah, exactly, Bear, right? Exactly. Okay. We've got lots of answers here. And the correct answer is $4.60. Remember, the amount of premium or the amount of extrinsic value that's in a call should be approximately the same as what's in the put. The 660 that many of you answered, okay, all you were doing was looking at the price of the option, of the call option. What you didn't factor is that at 660, there's $2 worth of intrinsic value, leaving 460 worth of premium or extrinsic value. Okay, so let's see. The first 460 to me looks like Scott Schaefer. Scott Schaefer, are you still here? Nicely done. Does everybody understand how this is 460? This is great, guys. I see a lot of people saying, oh, now I got it. Well, that's what you're here for, right? Have some fun and learn at the same time. Okay, the wheel is officially closed. The wheel is officially closed. If you're not in here now, you are not on today's wheel. We do have one more question for everybody. Option quiz number 4, break even. Break even here. Okay, Palo Alto stock trading 387. We're putting on an iron condor position. You got a short put spread, you got a short call spread, and you got a price of $4.30 credit. What are the break evens? What are the break evens? Okay, while we are going through all this, what is the market doing? Okay, S&Ps have rallied back a little bit. They were down close to 30 points earlier. They're down 19. NVIDIA's come back nice. Thank you. Crypto has staged a very, very big comeback from the last several days. Remember, everybody, that the market is closed tomorrow. And then on Friday, the market is open until noon Central Time. Noon Central Time on Friday. I will be here. Okay, probably not going to be a lot of activity going on. Okay, probably not a lot of activity going on, but you never know. You never, ever know. Okay, let's figure out what the break even is. So on the downside, the put spread that we sold starts to be worth something at expiration below 377.5. We collect 430. So if we take 377.5 less 430, we get 373.20. Okay, does everybody see? Because we got a lot of other answers there. Got a lot of right ones, a lot of other ones though. Does everybody see the 373.20 break even to the downside? Below that, we're going to lose money. Does everybody see the 373.20 before we look at what the upside would be like? Okay. Now let's do the same thing to the upside. 402.50 is the short call. So above that is where we start losing money. If we take 402.50 and add in our credit of $4.30, that puts us at 406.80. Everybody see that? So 373.20 on the downside, 406.80 on the upside. Those are the break evens. Okay, let me go back here and see the first correct answer, I should say. Yuvan, are you still here? I think you are new to the live stream. Is that correct? Yuvan is beautiful. Love it. Love it. Okay. Hopefully that was fun for everybody. Want to add in a little fun while at the same time still making this worth your while, still going through, calculating things that we need to know. Okay. You all know what time it is now. It is time for our wheel. Okay, Robert, let me see if you are on here. Everybody wants to know. I see one. I'm looking for more than one Robert on here, guys. And from what I see, I'm getting dizzy looking at this. There is only one Robert on here. All right. Here we go, guys. Here we go. Today's winner, Anthony or Mark. Anthony or Mark. We got a new winner today. Anthony, I'm going to assume the C is not silent. Anthony Casargo, are you here? Anthony Casargo. Oh. Boom. Wonderful. Wonderful. I think we should do one more, right? It's a holiday. I think we should do one more. The C is silent. Okay, Anthony, my bad. Anthony Sargo. All right. Let's do one more, guys. That's a good one, Paul. Here we go. Here we go. Who is this going to be? Kent, are you still here? We know you are, Motown. Kent, are you still here? Of course, that's a great answer. Okay. Kent Von Hoff, number 2 wheel winner. All right, guys. Really appreciate you guys tuning in today. Hope you had some fun, challenged a little bit. Congrats to all of our winners, to the quiz winners, to the wheel winners. Most importantly, I hope you all have an amazing Thanksgiving, guys. Be safe. I will be here Friday morning. Remember, we are only here for a couple hours. Market closes at noon. Those of you that won, I put in the chat up here. You got to send me an email. prosperswag@prospertrading.com. Send me an email with your size, mailing address, all that good stuff. Eat that bird. That's right. Have a wonderful one, everybody. Stay safe. Enjoy. We'll see you on Friday.